Tuesday, May 28th, 2024, Monaco 64, home of alternative economics and contrarian views. If you have been following my channel for the last 4 or 5 years, you know that we've been covering commodities quite a bit, and in the context of geopolitics and the fact that the world is breaking up geopolitically. We've got a multipolar world. Back in 2020, Zoltan Pozsar, an influential interest rate strategist at the time, he was at Credit Suisse, he said we're going to have a Bretton Woods 3.0 with an intriguing thesis that said that we would be witnessing the birth of a new world monetary order centered around the commodity-based currencies in the East that is likely to weaken the dollar system. He called it a move away from inside money or fiat dollars to outside money, gold bullion and other commodities. And he claimed that there's no further need for many countries to collect any more paper assets. And that has been proven right. In the last 2.5 years, we've seen massive buying of gold bullion. So countries are now holding gold bullion instead of dollar reserves or treasuries. And I think that's going to continue. But what we're going to look at today is the tech side of commodities, which, to be honest, 4 years ago, I didn't see it. But there's an article here from May 22nd by Simon Black, and he says, tech poised to be commodities' friend and disinflation's nemesis. I'm going to put a link to this article below in the description. You can go through it, but just go through the first part here so you can get an idea. Increasing power and raw material demand from new technologies such as generative AI and EVs is likely to be a secular tailwind for commodities and thus an impediment to a return to a low and stable inflation regime. Energy stocks are likely to outperform. Tech is hungry for power. Even Barron's recently said, should you ditch bonds in your portfolio, the case for buying commodities instead. JP Morgan CEO Jamie Dimon recently said, we can't rule out a hard landing for the US. Stagflation will be worst outcome. Stagflation, of course, commodities, bull markets are all kind of synonymous. And finally, on a technical basis, I've been looking at this chart for the last few years, and I think it's more compelling than ever. And we have to thank Crescat Capital and Tavi Costa for it. It says, undoubtedly, one of the most important macro charts of the upcoming decade. None of us own enough hard assets, commodities to equity ratio. So there you go. There's a lot of potential to the upside. So it's with that in mind that we will be looking at a commodity today that is key for the tech sector, especially for the semiconductor industry, electronics, AI, and the transition to renewable energy. And we will be looking at a great opportunity to profit from a mining company that will soon own the biggest European mine of this commodity. So you might be wondering, what's the commodity, Mario? Well, the commodity is tin, and Rick Rule, who many of you have heard of, the highly successful mining executive, called tin the forgotten energy transition material, and also said tin production has been fairly constrained. I'd like to thank IberAmerican, the company acquiring this tin mine in northwest Spain, for partnering with my channel. Its US ticker symbol is IBRLF. First, let's go over the tin market a little bit. Tin was the best performing base metal in the first quarter of 2024 in the LME, or the London Metals Exchange. So tin has momentum, and Wall Street cannot ride it with an ETF. And why is that? Well, because there are no tin ETFs. And this is the important part here about tin. It's not just the tech side of it that is important, but also the geopolitical. We're seeing a lot of tension between the West and China vis-a-vis Taiwan. So over 70% of refined tin production is attributed to China. China is also the biggest consumer, and it consumes more tin than it produces. And the other major producers are mostly emerging market countries where there's a lot more political and rule of law risk, so to speak. And that includes Indonesia, which has aligned itself closely to China. So jurisdictional risk for the supply chain of tin to the West is very high, I would say. A little bit more about tin. Well, tin is used for soldering, and demand for tin has surged among booming sales of electronics in the work-from-home era. So a little bit more about IberAmerican. Well, the company is about to sign an acquisition agreement for the largest tin tantalum mine in Europe. The Penota mine is in Galicia, northwest Spain. Spain, of course, is a first world country. It's much more stable, I would say, than an emerging market country. Yes, there are always risks anywhere, but it is within the West or the NATO sphere of influence. So supply chain disruption risks should be fairly minimal, I would say, in Spain. The current owner of the mine spent tens of millions of dollars over the last 5 years developing it. And at peak production, the company was valued at a market cap of $78 million. Unfortunately for the current owner, but fortunately for IberAmerican, because of mismanagement, mine production came to a halt a few months ago. As a result, the sale of Penota will be a distressed one. IberAmerican should seal the deal soon for 6 million Canadian dollars, or around $4.4 million, which means that we'll be buying Penota for virtually 10 cents on the dollar, as the current owner spent tens of millions developing it. According to management, IberAmerican's market cap after the acquisition should be around $22 million, and that includes a mine that helped the current owner be valued at $78 million. Therein lies the opportunity, in my opinion. So the CEO, Campbell Beecher, is determined to increase revenues by improving quality and accelerating production, because he's brought in engineering experts that were tasked with building a plan to achieve efficiencies. So I also like to look at the people or management of a company. So that's what we're going to do now. The executive chairman, Gene McBurney, is also chairman and CEO of Canaccord Genuity Emerging Markets and co-founder of GMP Securities, one of Canada's most entrepreneurial and long-standing independent investment dealers. The CEO, Campbell Beecher, he has over 20 years experience in investment banking, including founding Byron Capital Markets, an investment bank focused on the electrical metals market. And then you've got independent director David T. Young. Well, he was previously a principal at the Carlyle Group. The Carlyle Group is one of the largest private equity funds in the world. They manage hundreds of billions of dollars, of course. And he was part of a leadership team managing around $4 billion in natural resource investments. So the opportunity here is that IberAmerican is soon to be the owner of the biggest tin mine in Europe via distressed sale, but at the same time is ready to put the mine back into production with a team of expert engineers and potentially produce even more tin than the previous owner. And yes, I accept there are risks to how quickly they can start production, but I think the odds are good that they will start very soon with their team of experts. And don't forget that the previous owner's market cap reached 78 million during peak production, while IberAmerican is expected to be valued around 22 million right after the deal. So I recommend you do your research and due diligence, and also be aware that investing in mining companies, be it in gold, silver, or tin, is a speculative endeavor, but it's also an opportunity that can provide you a big upside potential. Keep that in mind, I would say. The ticker symbol again in the US is IBRLF. And with that, I'm going to wish you all a very good day. Take care. Bye.